Their board is disputing Kenya Commercial Bank's valuation of their shares. They're saying an independent valuation places a value of 6 shillings and 10 cents per share, considerably higher than the offer that KCB had made. So let's keep an eye on developments there. KCB had valued NBK at 3 shillings and 80 cents a share. So quite a meaningful uplift is what they're looking for. But there's a very tight deadline. I think it's about this. KCB must, if they're going to vary their offer, it must fall before 24th of July. So they're asking for quite a big variation in that offer. As I was coming in, Stephen Kimani, who's my producer, gave me this story. Tullow Oil, a convoy of their trucks carrying crude oil from Lokichar to my hometown of Mombasa, operated by our contractors, was briefly interrupted at Lokichar by a group who identified themselves as members of an association representing truck drivers from Turkana South, and were demanding for more opportunities for local drivers. Tullow is saying they can now confirm that all its field operations, including crude oil transportation, continue as normal. They also confirmed that 30% of all EOPS trucks and driver opportunities have been provided to Turkana local business people and local drivers respectively. In the extractive industry, that's called the license to operate, and you have to have the local community support in order to operate in many of these difficult to operate in places. And that's a clear example of a short-lived interruption to that license to operate that I was speaking about. Turning, of course, this is beer prices have risen by 10 bob. This is an inflation-related adjustment. I think there's a further adjustment coming from excise duty. So if you're paying 10 bob extra, your barman or barwoman is not trying to steal from you. It's a price increase. And of course, that's the Tusker beer, the iconic East African Breweries brand. Very interesting article that came out. And we've spoken about this before in saying that basically MB costs, the costs for you to be on the internet, dropped by 42% year on year. Safaricom brought down prices by 42% in the 12 months through March. This is a report that came out of Vodafone. And listen to this, active 4G devices surged 50% to 3.3 million. 30-day active customers using more than 100 MBS jumped 12% to 7.4 million. I've used 100 MBS in a day, but obviously if you download video or you look at, you look through social media, those clips, they're very they consume a lot of data. And I think, when you look at Safaricom's results, obviously the 75% of the profit gain year on year came out of M-Pesa. But what they did is they essentially slashed prices for the internet in order to turbo boost consumption. And I think you're going to see a great hockey stick. A hockey stick is when something's going along pretty flat and then suddenly goes like that, just like a hockey stick. Investors love hockey sticks because that's when you tend to make a lot of money. And I think the point I'm trying to make is that, look, they brought down prices in order to get us hooked on the information century, and indeed we are. So 42% reduction. Millions of Kenyans are now hooked to the 21st century and information superhighway. And the truth is, it's very difficult to dump a Ferrari for a Pro Box. And essentially what they're giving us is a Ferrari of an internet connection. And once you've experienced that, you're unlikely to go to something which is much slower. So I think that curve, data consumption, and we've got a great guest in the second half, that's Dr. Bitanga Ndemo. who has been ahead of the curve when it comes to the information century for more than a decade, and we can touch on this with him as well. Now let's turn to Africa. The military, notwithstanding this truce agreement between the military and civilian opposition protesters, most people still think that Mr. Hemeti, who is in charge of the Rapid Response Force in Sudan, is calling all the shots. And I think that's the case. They will be in charge for, I think, up to 3 years before handing it over to the civilian component of the agreement. Tomorrow I'll talk to you about where he earns his money. He has a gold mine in Darfur, which is throwing off about $60 million. And for each person he sends to fight in Yemen for the Saudis, because the UAE have now withdrawn, he's being paid $2,000 a head. So he's got a lot of cash, and this might surprise some people because a lot of people think it's the Saudis and the UAE who are funding him. But it might very well turn out that he is actually funding himself. But we'll come to that in tomorrow's show. So the Hemeti and the military will officially remain in a position of full power for at least 3 years. With the help of their allies in the Gulf, the military will continue to do everything in its power, even after the transition period, to remain the ultimate power broker in Sudan. They've actually also switched on the internet. That was off for, I think, more than 35 or 36 days. That got switched on just as I was coming in the studio. Airtel Africa, which listed in London at the London Securities Exchange at the bottom of the range and then dropped 12.5% below the bottom of the range, has listed at the Nigerian Stock Exchange on Tuesday, the bourse said, having previously postponed its 4.4 billion listing. We'll look and see how many shares they actually sold, if any, later. Now there's been power rationing. That's the Jibay 3 dam in Ethiopia. There's been power rationing in Ethiopia for quite a while, but they've lifted the power rationing for homes and reduced load shedding times for industries after the water levels at the hydroelectric dams rose. Seleshi had said in May, when announcing the rationing, that a drop in water levels at Jibay 3 Dam had led to a deficit of 476 megawatts, more than a third of the country's electricity generation of 1,400 megawatts. The thing to note about Ethiopia is the power situation is about to inflect. There's a ton of power that's going to come from Jibay 3. And then, of course, they've got a lot of other power resources, solar, obviously, geothermal as well. And I think the power rationing story will be something of the past in the very near future. We've spoken several times about the avocado story, about the surge, the outsized millennial demand, which has driven avocado prices to record highs all over the world. And I came across an interesting story about how avocado farming is replacing coffee farming in Tanzania. On the mountain slopes in northern Tanzania, long renowned for quality Arabica coffee beans, but here commercial coffee hasn't been produced in a long time. Instead, tens of thousands of pear-shaped avocados are ripening under the equatorial sun. Africado, which is this business here, is one of Tanzania's first commercial avocado farms and the first to export its fruits abroad to the UK, the Netherlands and France. In 2018, they exported 3,000 tons of avocados, about half of Tanzania's production, to Tesco's, Sainsbury's, Waitrose and Okada in the UK. And I've spoken about the crypto millennial avocado economy. And my perspective on avocados is the demand is going to continue to grow. The problem for farmers is it's up to 7 years before you get your first harvest. But let me tell you this, I really think if you're considering avocados versus tea or coffee, you're better off with avocados, because the global demand will continue to grow and continue to surge. So that's a positive story. They're doing well. They're doing far better than had they been planting coffee. He's created something like 6,000 jobs. We've been talking a lot about the Turkish lira. Erdogan became one of the first presidents I can remember in eternity to fire his central bank chief. He did that yesterday. Currency weakened about 2%, but it's kind of stable at that lower level. But this tells you the story. This is over 10 years, from 2010 to 2019. The red line is the Turkish lira. It was at 120, and today it's around 65. What does that mean? Put it in shilling terms. It would mean the shilling, which is around 103, has gone to 165 or thereabouts. It's a very big devaluation. In fact, if you're thinking of a holiday, you should be going to Turkey, because it's as cheap as chips with the currency at this rate, and a very interesting place to visit. But the point I'm making is the trend is your friend in the markets. And what's that telling us? That's telling us that the markets have less and less trust in Turkey. They are giving a lower and lower value every year to that Turkish lira. That was the big slump last year that we saw. We bounced back a little bit, but I don't think they can do what President Erdogan wants, which he wants a stronger lira and lower interest rates. He's going to have to choose one or the other. Let's go to what are called safe haven assets. Gold, you know what's said about gold. People buy gold because they're worried about really, really bad outcomes, war, or things like that, inflation sometimes. And we had a huge run higher in gold in the last 6 weeks. We were actually somewhere around 1,280, right? Do you see that? That's 1,280. We went from 1,280 to a high of 1,440. And we're now back to just below 1,400. And this is worth watching, because it's what I call a safe haven story. If people are worried about the world, if they're nervous about things, they tend to buy gold. So what we've seen is maybe that was peak pessimism, and now we're seeing a little bit less pessimism. People are still pessimistic. We're still much higher than we were. Look, much, much higher, but not as high, not as the peaks. I actually think it's overdone. We're going to fall back a little bit further. And of course, those negative interest rates have also helped gold, because, why put your money in the bank if you're going to get less money back after a few months, when you could just buy gold and sit on it? You might not get any interest, but you're not going to get less gold back at the end of it. So people have been moving money into gold. And cash. You might as well hold cash. Why give the money to the bank when you can just sit on it and you won't lose any money on a negative interest rate basis? The best performing asset this year, if all you'd done is close your eyes and buy Bitcoin at the beginning of the year, you would have returned over 300%. And let me tell you, in the nature of the financial markets, a 300% return in half a year is a very, very rare thing. Now, what is this about? This is also similar to the gold story. Bitcoin utility, forget about it. You're never going to go and buy a pizza with Bitcoin, ever. And if you do, it's a gimmick, a PR gimmick. It's not about that. Bitcoin is the 21st century digital gold. It's a safe haven. People see it as not correlated to financial markets, and that's why I put them next to each other. Bitcoin is the new gold for the crypto trading, millennial, avocado eating folks. This is what they're buying. They see this as a better safe haven than fiat currencies or any other thing. And that really is a monster move, 300%. We need to keep an eye on it. You saw a couple of weeks back, it fell $2,000 in the space of a second. So it's volatile, we know that, but at the same time, I think its value is increasing because people see it as a gold substitute for 2119. Now turning to this interesting report came out saying that in New York, 23% of all the trading volume at the New York Stock Exchange happens in the last 30 minutes. Isn't that incredible? And they also, 90% of each day's activity has to do with indexes, quants, and rules-based option strategies. The machines have taken over. The human is barely involved anymore in the trading of stocks in New York. It's quite an extraordinary thing that's happened over the last 15 and 20 years, and part of the reason why we have these risks of almighty sell-offs, because when the machines get a gremlin and they all start selling together, they can't get a timeout like a human being would. And that's what a lot of regulators worry about, is the takeover by the machine, the takeover by algorithms, and the risks that presents of very, very dynamic, fast-moving markets to the downside especially. This is the dollar index. This is a composite of the dollar versus about 10 different currencies. And a lot of people, you might look at the Kenya shilling versus the dollar, also look at the dollar index, because you'll have a better idea of what's really going on. And what you can see is that the dollar is in an uptrend. You see those two green lines? That's telling you that the dollar was rising. It was trading in between there, but going higher, as you can see. It fell below here when we were talking about the Federal Reserve, when he started to make some comments about an insurance rate cut. People started to sell the dollar. But we're back now in that green line. And that's telling me we're back on the bull trend for the dollar. So keep that also in mind as we move forward. When I was in banking in the City of London, Deutsche Bank was a big elephant in the room. It was an enormous bank. It was like, practically a central bank, and the amount of liquidity it used to have. And it's just been an amazing story of a slow motion collapse. The share price is now somewhere below €5. This was probably nearer 100 a couple of years ago. It's just an incredible story. This was the engine, the bank for the German economy, and the German economy is so strong, but the price is just simply collapsing. Yesterday, they announced a massive restructuring. They're saying they're going to exit equities trading. 18,000 people going to be made redundant. 74 billion euros of assets to be hived off into a bad bank. Our central bank, of course, used the same thinking for the good bank and bad bank in those buyouts by Chase Bank, and they're basically following the same strategy. But let's see how that now plays out. But really, how the mighty have fallen. And that, in that case, it's certainly Deutsche Bank. This is the Libra coin. Of course, we've spoken about this. This is Facebook's Libra coin. Look what Professor Joseph Stiglitz has said about it. Why would anyone give Facebook a zero interest deposit when they could put their money in a US Treasury bill or a money market fund? He says the real problem with our existing currencies and financial arrangements which serve as a means of payment as well as a store of value is the lack of competition among and regulation of the companies that control transactions. As a result, consumers, especially in the United States, pay a multiple of what payments should cost, lining the pockets of Visa, MasterCard, American Express, and banks with tens of billions of dollars of rents. He's talking about remittances, the money flow from the US. Half of our remittances, by the way, come from North America, out of that huge $2.2 billion number. So he's talking about that. And what he is saying is that excessive fees are being charged for debit cards, excessive fees associated with credit cards. And then he's saying, what is Facebook's business model? And why do they seem so interested in this new venture? And he's saying it could be all about a cut of the rents accruing to the platforms through which transactions are processed. So the point he's making is this is not a cryptocurrency at all. This is a remittance currency. This business model is based on moving money around the world. So people, Kenyans in the US who want to send money to Kenya can use this service. All over the world, we have people living far away from their homes, and that's what this is targeting. Stiglitz, of course, is very, very harsh. He says this: in just a few short years, Facebook has earned a level of distrust that took the banking sector much longer to achieve. Time and again, that's Mark Zuckerberg, time and again Facebook's leaders, faced with a choice between money and honoring their promises, have grabbed the money. And nothing could be more about money than creating a new currency. This is Stiglitz again. Only a fool would trust Facebook with his or her financial well-being, but maybe that's the point. With so much personal data on some 2.4 billion monthly active users, who knows better than Facebook just how many suckers are born every minute? Harsh, but true. Let's move on to politics, international politics. More people live in that circle there, India, China, than in the entire rest of the world. Isn't that amazing? Sorry, I had to share that with you. It took me by surprise. That's also the Mekong Delta, China, India economies. Now, this is Carrie Lam. She's the Hong Kong SAR chief executive. And, you know, this was all about that fugitive bill. The Chinese wanted to pass a law that meant if you were guilty of a crime in China, they could just take you from Hong Kong and take you over to China. And you've had this enormous outpouring of people on the street saying, nope, not going to happen in Hong Kong. And then you've had her now finally stand down. She says the fugitive bill is dead. And then the Hong Kong opposition say, we cannot find the word dead in any of the laws in Hong Kong. And you know, this has been a big issue, particularly for Xi Jinping, because at the end of the day, she's a puppet. The puppet master is Xi Jinping in Beijing, and she's taking his instructions, no doubt. And I think what Xi Jinping has realized, and you know, for China, the biggest risk is around their periphery, Hong Kong, Xinjiang, Taiwan. These are the weak points, the soft underbelly of the Chinese juggernaut. And therefore, you know, he was caught in a trap, Xi Jinping. He had to stand up, or she had to stand up on his behalf to the protesters. But the thing is, Hong Kong is not Xinjiang. Hong Kong is a very sophisticated economy which depends on its connectivity to the rest of the world. And it just was not making good TV to have a highly militarized response to what were peaceful protesters practically all the time, except for one or two exceptions. So I think that's the main point for me, that they couldn't Xinjiang Hong Kong. They've Xinjiang, that's for sure. And the periphery, Hong Kong, Taiwan, Xinjiang, is what I call a boil. And it will not be lanced that easily. And to that point about the periphery, and that's Hong Kong, that's what I mean, will not be Xinjiang. This is a guy protesting. What a great photo, isn't it? You can imagine what he's saying. I don't know, but I can guess. And now we've learned that the US is going to make its biggest arms sale to Taiwan. That's Taiwan. The Chinese think Taiwan is a renegade province of China. And in fact, according to another report I saw, they've been discussing a military option to go in there and take it over. And Taiwan, of course, has been, the US has been an ally of Taiwan, and now they're selling them 108 Abrams tanks, Stinger missiles, and related equipment to Taipei. And this is making the Chinese extremely upset. And I saw there's one chap on Twitter, and he's the mouthpiece of Xi Jinping. He's the only Chinese person I know who's allowed to tweet in real time. Even the Chinese media can't tweet in real time. That guy, you got to follow him. If you're interested, you come to me over social media. I'll give you his Twitter handle. But he said that, you know, what would happen if these weapons are delivered into Taiwan and we bomb those weapons. And he's saying basically the US will not stand up to China. So you can see we've got a lot of flashpoints around China, and we haven't even spoken about the trade war, about which we've been all a little bit quiet of late. Let me finish off before we go to our second half interview session, You remember this, these are SAS boats. They seized an Iranian oil tanker just off Gibraltar, making the Iranians very upset. And the Iranians are threatening to retaliate. One BP tanker is hiding somewhere in the Persian Gulf, too scared that the Iranians might somehow hijack it. So keep an eye on that. The oil market has not been moving around that much, but it could go off at any point if we have something kicking off in this area. And finally, I came to a report saying the US wants to bring back the Shah of Iran. The Shah of Iran, the Peacock Throne as they were known, Shah Reza Pahlavi, was a US ally for many, many years. I think it was 1978 when he was finally overthrown. And in this report, it's saying that this is what the US want to replace the mullahs with. You know, Trump has been waging asymmetric economic warfare on Iran. We thought he was going to bomb them a few weeks ago, but saying that basically they've been training, this is the old Shah, the Shah's son, to be the new Shah. Now, do you know what happened to the last Shah? That he was overthrown, the Americans wouldn't have him, and that was him in Panama looking out to sea. It ended very, very badly for that Shah of Iran, and it seems the Americans have not learnt that lesson and are exhibiting the same deluded ideas that they exhibited a day before the Peacock Throne got plucked. But keep an eye on Iran. This is Metropole TV. This is The Smart Investor. My name is Aly Khan Satchu. Join us after the break with the dynamic, ahead of the curve, and inestimable Dr. Bitanga Ndemo.